Hi there. It's time to look at 29 level 0 to level 2 chains through the Wyckoff lens to see which ones are actually hidden gems and which ones are falling knives. So if you're new to my session, these are the 3 key items I usually cover across all these crypto projects. And of course, I'm not a financial advisor. This is based on my own personal observation just for discussing with you and for education purpose. So let's begin with the very first. And remember, there is an assumption when we discuss about these, is that the particular project is going to continue in the future, which in crypto's world, that may not be always the case. That's the biggest caveat, because some projects will end, okay? It's the unfortunate truth that, it's difficult to accept. So back to Cardano. Here we're looking at the weekly chart. Afterwards, we'll go to the daily to see whether there are any potential trend changes or if there are particular dates that Cardano will break outside of a trend. So Cardano is somewhere between the preliminary support, where the people panic sell whilst whales gas in, and also the selling climax. So it's really key what's going to happen next, because if we look at this currently, it probably would tempt us to jump into conclusion that this is the selling climax. However, there's a good example actually in the same chart. If we look to the left, back in 2022, when the price first came down, there was a period where a little bit of sideways trading happened, and after that, you see that eventually dropped deeper. So this particular section, let me highlight with the pen over here, is exactly the part that I'm trying to refer to. So about 5 weeks of horizontal trading after that initial, fluctuations, eventually it fell to where the selling climax actually landed. So fast forward to where we are now. You see the similarity, right? So not this part, but here, this circle. We are going through similar kind of, sideways trading. It's a narrow price gap for the past couple of weeks, including this week, and there's only roughly about 2 days left. The volume themselves isn't very high. During that time, it was also lower than the average if we look to the left and the right, okay, before it finally dropped to the selling climax. So we may be going through the same period as of this moment. So that's why I said just now, we are probably somewhere between the preliminary support and the selling climax. Alright, so if that's the case, then there may be some further downward movement coming for Cardano. And then if the selling climax is set, then we'll head towards the automatic rally. So don't get overexcited and think it will shoot all the way back to somewhere higher around the green key level of 1.14. That's not that straightforward, okay? That would set the horizontal trading range top and then come back down to challenge the lower level. So that's the theory, okay? If we look to the left, that's what it is. If you're new to the Wyckoff method or to my sessions, that's the thing I was describing just now. Alright, it pops up, come back down, and it will test multiple times. Okay, before the final test is over, the paper hands and diamond hands, these will continue until the accumulation cycle finishes and turns into the distribution. And in terms of the daily chart, here, previously we were looking at this trend, which it seems like the price has broken outside of the trend. Sometimes when this happens, I'll have to re-examine to see whether there's any room to adjust the air hockey table, just to make sure that it's not a fake breakout. Because these points, these reference peaks and valleys that we use to set up the air hockey table, sometimes they're not very tight when we move along the timeline, alright? So we have to swing it a bit, and this time it looks to me it's a confirmed case that it has finally moved outside of the downward trend that started sometime back in September, October time. And this, I would say it's confirmed in the daily time frame only, okay? Meaning it can come further down. I'm not going to touch these tags because these were experimental for experimental purpose, so I'm not relying on this going forward in these speedrun speedrun sessions. So here, from now on, we may likely go through a horizontal trading period, okay, a sideways trading period. So the breakout I mentioned, that's likely going to happen around the December 7th or 8th. That happened exactly around that time because that's where the ceiling of the air hockey table crosses this blue support line. If we look to the left, there was a period around April 2024 all the way to October 2024 setting up this level, and currently the breakout happened exactly right over there like we discussed earlier. So that's for Cardano. Expect more testing to come while there may be a short leg upward. Alright, obviously we have to wait for the selling climax to confirm, because look at these long wick just this week. Is basically quite a bit of selling, pushing the price back down, and the volume isn't that low, so it's still going to fluctuate. Next, Aptos. For Aptos, it's still going through a very deep seeking or low seeking journey. Alright, currently is at the level set by the October 10th event. Okay, we haven't got a line over here. I might as well borrow this and put it over here. So that's where it's pausing at the moment. Okay, the October 10th level. If you see this long wick downwards, it's still part of the diamond hands, paper hands test process. If we look to the left, we see why there is a yellow dash line initially over here. That's the low back in 2022 October, and let's hope it doesn't seek all the way to that point, because as of this moment, we see a little wick from the bottom. When we get to the daily time frame, we'll see a little bit more detail. So in terms of the Wyckoff stage, from the big picture perspective, it's part of the test, and whether is going to be a spring before the actual, like the last shakeout before the actual climb, only time can tell. But the key thing is we know these two support levels. One around 1.63, that's where the October 10th landed, and the other one is around 0.96. If there are still sufficient paper hands lying around and then waiting to sell their stock if the price goes further down. Okay, and what we hope for is for the sign of strength to appear, meaning the price to come challenge the green key level of $6.16. That's where the automatic rally tested, so it best hits through that particular level with volume. So this on the last week of September is not a good enough indication to me. Okay, at least we want to see something like the first week of September, or even better, the week of 23rd of June. Okay, if the price really shoot up, it should carry such volume to confirm that really is a sign of strength. Okay, daily chart. For Aptos, we haven't drawn this air hockey table yet, so let's do this now. Here, after the October 10th event, this downtrend, has started after initially it was a horizontal trend, okay, a sideways trading area. But then, it started with this, and it's still continuing with the trend. So if we draw a center line around the box, the fortunate thing is that the price is trading along or above the center line, meaning it's at the stronger half of the channel. Okay, not that it's very high. Best if it's challenging the ceiling. However, we do see an indication now, an early indication over here, that it's finding a bit of support at the level where the October 10th tested. The volume has slightly declined, but not very obvious. Compared to this on December 5th, currently is significantly lower, like around half. So we want the volume to go low on these red candles, like what happened on the 4th of December. That's the best. That means it will keep the price above this yellow line, continue to trade towards this triangle, and by Boxing Day, that's where the first breakout opportunity from this downtrend comes. If it doesn't, if it got rejected and falls below this first dash line, maybe even earlier than Christmas, then the second opportunity comes when we get closer to mid-January. Okay, assuming it's going to trade above this second yellow line that we took reference from what happened back in October 2022. Okay, remember, breakout opportunity from the downward channel around Christmas, Boxing Day, and if that fails, the second one comes in mid-January. Next, Atom. So Cosmos going through a similar period as Aptos. It's a very deep test. However, different from Aptos is that Aptos has entered the accumulation much earlier. For Cosmos, it's the early stage of accumulation. Okay, even though they are both seeking very low level. The volume currently is still not low enough. So I'm expecting some more downward action potentially. The risk or the tricky part over here is that we see the candles are getting very close to the bottom of the long-term playground zone. So here, if we look to the left, that's where March 2020 as well as August 2019 ended somewhere around that level. Not the lowest point for 2020, because if we look at the wicks, it went to 1.49 as well as the lowest point 1.1. The reason I have this white solid line over here is because the prices closed at that level. Not that is the level that's been tested, not the lowest level that's been tested, okay? When the time comes, or actually while we're here, let's borrow the line we have over here and put it into Cosmos. So there's one over here, and let's set it to get all the way to the right hand side. Let's see whether that's enough. No, give it 100. Yeah, that looks good. And let's duplicate one more. It's not. Okay, now we have better reference. Okay, it looks close enough. So that's where we are referring to. Three lines, one at around 1.1, one at around 1.5, and obviously this one at around 1.9, the white solid line, the bottom of the long-term playground zone. So currently the price is still traveling at relatively high volume towards that point. This wick from the top is indicating to us that somebody is or has been actively selling even this week. So when this kind of selling is over and the selling climax eventually appears, similar thing, we expect the automatic rally to happen. Whether it's going to happen or reach the point of the white line or the red key level 2.48, it's too early to tell because the selling climax hasn't appeared yet. Alright, and then continuous test afterwards. Same thing, very similar. Daily. Alright, time to draw an air hockey table. This time, again, very similar to Aptos. After the October 10th event, a new downtrend appeared after the sideways trading for a pretty long period of time. And as of this moment, the price, again, as the bulls and bears are battling around the center line, and currently is somewhere lower than the center line, meaning it's on the weaker side of the channel or the table. The fortunate thing is that it's not too deep, not too close to the bottom. So if we look at the same breakout time chances, potential dates, here, the first one is near the end of January. Yeah, it's a bit far compared to what we have seen just now, because if the price is successful staying above the red key level at around $2.40, it would have the chance of the near the Christmas or Boxing Day, same as Aptos. But now we have to look at end of Jan if it continues to trade within the channel and finding support above the white solar line over here at around $1.9. So that's the first opportunity. The second one is this one. Somewhere mid-late February, okay, assuming, like I said, it doesn't hold and continue to seek the lower levels that we have seen back, in about 5 years back. Okay, that's less optimistic or more pessimistic scenario compared to what we're seeing now. So best is that we see these volume bars coming down if it continues to be red candles. So when, hopefully in the next few days, it continues to trade towards the white solar line, let's hope it finds support and start to trade horizontally around here and eventually break outside of this downtrend and forms a new trend. Whether it's sideways, it's upwards, we will know by then. Okay. Next, AVAX. Very busy chart. Let's enlarge this, and where it is at is still part of the week, the paper hands or diamond hands test. So let me update this. This was when I first put it in quickly. So if we look to the left, that's not unfamiliar. Basically, these tests will continue during the accumulation cycle. There was a period of this, upthrust over here. I should avoid saying upthrust. This pump over here. I don't want to confuse you with the distribution upthrust. Okay, this pump over here, I consider that another bigger sign of strength. There are a couple of coins exhibited similar kind of behavior around that period, but they're at different stage, and some of them are, that pump was pretty crazy, and I consider some of those as like a mini distribution that happened. But irrespective of how we call them, the thing is the big guys tested and continue to take profit along these waves. So where we are now is potentially a spring or just a deeper test. Because when the next sign of strength comes that we hope to see, okay, best to go above or go close to the yellow key level of $29.30. Even better if it goes closer to the green line. But it has to sustain, okay? People would argue if not because of the October 10th tariff announcement, AVAX would have pumped. That may be the case because sign of strength has appeared. The backup and last point of support has appeared. Supposedly, it should be a time for AVAX to launch, but unfortunately, what happens in October dragged everything to the south side. So let's expect more tests until the macro environment is clear. Then the time for AVAX will come. All right, the volume best to continue to lower if it's still hovering around the current levels of the first support, the blue one at $12.20. The resistance is $14.05, the purple key level. You see for 3 consecutive weeks, these long wicks from the top, whenever the price wants to go above this purple key level, it got rejected back to between the blue and the purple. And when we get to the daily, here we see that the price, once again, similar to the others, has gone outside of the downtrend. Okay, this started after October 10th. It seems like the panic is finally over, and we have entered a sideways trading zone, instead of the downtrend. So here, the volume of today is lower than the previous 2 days, which is a good sign. And even yesterday, we see a long wick from the bottom. So that means there are people buying from that level. So all these are kind of positive to me. All right. We don't want to see something like what happened last Friday, December 5th. Red candle with long volume bar with no wick from the bottom, meaning nobody was providing support, pushing it back up to closer to the purple key level. But this week, or the last 4 to 5 days, things looks to me improved a little. Okay, even though we're at the same price level. So expect the price to continue to trade or bounce between the blue key level of $12.20 and the red key level of $15.80. Okay, until the point that we finally see the next sign of strength, which may not be too far. If this is really the spring, it can be quite close. Just that this is the weekly view, so when I say quite close, it may still take a couple of weeks or like a month or two. Okay, when we get into 2026, things will definitely change. Here, Bitcoin Cash. So previously we're asking, hey, last week we've got a pump. Are we actually going through another LPSY last point of supply? Meaning the whales may still be, offloading along this period. So it seems like it is, because there's a peak over here. However, it's not as simple as that, because there's also one possibility. If we look at the chart, this horizontal trading area, while it looks like it's something just like after the upthrust and trying to come down, this may be a reaccumulation. So again, I seldomly touch on this. Rather than waiting for the next sign of weakness and maybe a little bit of bounce from that when it hits the orange key level of 450, there is a chance, which I tagged it over here for a couple of weeks now, there's a chance that this may be a reaccumulation, meaning it may bounce up or shoot up to show us an upthrust after distribution. Okay, may it be somewhere just above the green key level of 615, or even as high as the light blue key level of 700. So there's still a chance for that. However, let's not forget about this trend line that I've drawn. This red trend line is a declining peak or climax trend line that we hope to see it got broken. Okay, currently is pushing the price very close to the green key level of 615. So if this ever happens, let's hope it goes very close to the 700 level instead of just hitting the red line and then come back down. Then this red line effect is going to continue for Bitcoin Cash. Alright, so explain two scenarios over here. While it seems that there's still a chance for it to come down to show another sign of weakness, this week we've got a very long wick from the bottom, pushing the price back to above the ceiling of the long-term playground zone at around $575. So if this is really, like I said, a reaccumulation, this 20% chance may happen. Okay, so it's currently not a definitive trend that's been shown. It's kind of showing, both sides can still happen. Daily. Horizontal trend that we talked about, this blue box over here, Bitcoin Cash changed from this uptrend that started back in April this year and turned into the horizontal trend around August. Currently trading at the upper half or the stronger half of the channel or the air hockey table. And this uptrend over here within the horizontal or the sideways trend itself is still continuing. Okay, let's take this line over here. So, assuming it continues to trade along this uptrend, we see where this is pointing to, right? This ascending triangle. It's somewhere around Christmas. Okay? By that time, we will know whether it is going to break outside of this sideways channel and make an up move. Looking at the volume, though, especially the white ones, these 2 days, it's not particularly good, and it's not particularly bad. It's just average volume. Okay, it's higher than the low days, but not as strong as the days that we have peak volume. If it is really going to shoot up, for the next couple of days, we will see something like what we saw on December 3rd or November 21st, 22nd. But, best not to have like a very long downward leg, right? That's not something we want to see. As well, if a red candle appear in the middle, if it comes with a volume, it best looks like something on Wednesday, not the one on December 5th, okay? Not a long wick at the top. We rather have a long wick from the bottom, meaning there's still quite a bit of buying from there, all right? So those are the things we hope to see, and this is pointing towards somewhere around Christmas or Silent Night, where the breakout will be confirmed. Okay, so not too far from now, only less than 2 weeks. That's very interesting for Bitcoin Cash if it really happens. When we get to Bitcoin later, we would be able to see whether there's something similar happening for Bitcoin, because I did mention in the past that Bitcoin Cash somehow seems to be shadowing Bitcoin. So before Bitcoin, we have Binance. So Binance Coin. Again, we were discussing whether this is the last point of supply, and it looks like it is, but it's too quick to jump into conclusion because this hasn't finished yet. This may be just in like a sideways trend being developed, and it may go up before coming down. So let's keep this like this with the question mark for now. Okay, we're expecting this to happen. However, looking at what's happening to the candlesticks, these long wicks, whenever the price came below the 845 purple key level, it's finding support for 3 consecutive weeks already. And even though the volume isn't too high, is still an indication that this is a pretty strong level that may keep Binance Coin at a higher level for a while, unless something changed. Okay, if there are big news coming out dragging Binance Coin down, that's another story. But as of this moment, with the past 4 weeks behavior, there seems to be somewhere that Binance Coin is probably going to stay there for another week or two, at least. So if we get to the daily, like I said, it's a horizontal trend. So previously, if we draw another air hockey table or channel box, okay, they basically are very much similar for a lot of altcoins. It was a downtrend initially around September, October time, and all of them kind of synchronously moved outside of the downtrend, just in the past week. Okay, so that's where Binance Coin is now. It moved outside of the downtrend on Wednesday, and then, well, actually it was last Wednesday, not this Wednesday, and then eventually, currently trying to stay above the purple line, actually is trading within this sideways trend channel. So if I draw a line over here, it's currently fighting to stay on the stronger side of the channel. So let's see what's going to happen for the coming few days. If this really is the case that it's going to go sideways, like I said, it may bounce towards the 845, but then it's probably going to come to this level as well. We haven't drawn a line over here, but the next level above would be around 926. That's where it tested 2 times already in the past 2 weeks. So expect that to happen still, continue, probably for the rest of the year. Now, we get to Bitcoin. So we just touched on it during the Bitcoin Cash. What's happening, like I shared a couple of sessions back during the Bitcoin specific session, that it's probably going through a pretty boring period. And indeed, we're the 4th week into this boring period that the price bounces between the 81K to the 94, 95K level. So we don't see the intermediate level over here. But if we look at the daily chart, we see it has been trying to go challenge the red dashed line over here, around 95K, mid 95K. However, it stopped at a lower level at mid 94K. So I haven't drawn a line here, but you can see there is an intermediate level that exists here as well. So if we go to these minute detail in the daily time frame, we'll see why the past couple of days, whenever the price hits somewhere around 94,500, it got rejected from there. So that's from like a price level perspective. But back to the big picture. Currently, it's still returning back to below the blue key level of 91K. So that's what I said like for almost a month, that once it comes outside of this uptrend, it's going to battle hard around this key level. And for this week and last week, we're ending with somewhat like a cross as well as a pin. That may still continue. Okay, I did share that if we look at what happened back in over here, 2022, during this period that lasted pretty long. So when the price came down from the upthrust, it had its first LPSY. So it's very similar to this here. And after the first LPSY, there was quite a bit of sideways trading before the second LPSY came in, and then the final leg downwards. So after the first LPSY, we're going through this sideways trading period now. And that last one lasted for 12 weeks. We are only 4 weeks in. If it really is following that, don't forget, however, that we have a prolonged distribution cycle this time. Last time is probably only half of what we have. So from here to the last LPSY, it was 476 days. So from this point, the LPS, to where we are, well, actually, I should count the upthrust. I shouldn't count the last one because we haven't gone to the last one. From that one to the upthrust was 336. From the LPS this time to the upthrust is 658. So almost double the time. If the timeline really works the same, it doubles. This horizontal trading period between 81K to 94, 95K may last, how long? 8 months? No, not that long. 24 weeks maybe. That's still long enough. 6 months. Okay. I'm not sure whether that will be the case, but that's a possibility. Just a wild guess over here. Obviously, if it really is finishing its distribution cycle, then it would come down to the 74K eventually. But I already mentioned there is a dual support over here at that level because that's also the ceiling of the long-term playground zone. So Bitcoin may rebound over here as well. So it may trade a little longer over here unless somebody is trying to crash it, or whatever that's been the narrative that's been passing around, may it be about strategy, or some big banks are trying to short Bitcoin and strategy. If those are really going to happen, then obviously 74K may not be able to hold as well, and that would eventually trigger Bitcoin to re-enter accumulation, maybe around the 60K or mid 50K level. Alright, that's not so pessimistic scenario, because if it's really pessimistic, according to the long-term playground zone, if it really comes to the bottom, is a point that no one would believe. 15K, if I tell you Bitcoin is going to come down to this level in the worst case, for the worst case, okay? Even lower than where we have back in 2022. Probably people would say you're crazy, right? So let's not hope that to happen. Alright, just that we keep in mind, back in 2023, Bitcoin was still at 16K. With all the, what people say, like institution adoption, if they're really buying the dip, it shouldn't go back to that level. Alright, so let's hope it's going to stop somewhere, worst case, around mid 50K to 60K, if it really is coming down for an accumulation. Alright, enough guessing. Let's go to the daily. Again, similarly, okay, when we talk about Bitcoin Cash, we said it's seemingly going to break above a sideways trend, right? Now that we are at Bitcoin, it's a sideways trend. So started sometime mid-November within this downtrend box. Okay, it hasn't broken outside of this downtrend yet. And it's got a rejection just today from the ceiling and this purple dash line at around 93K. And it also dipped below, currently, the 91K key level. It hasn't fallen below this uptrend line yet. Okay? Those are the things that the lines and the prices are telling us. And the drop, while the price spread is larger than before, okay, this candlestick body is pretty long, but the volume isn't that crazy. So there is still a chance in the next 3-4 days, we see this wedge over here. It's still going to trade along here, assuming it's going to trade above this dash line. Let me adjust this. Currently it's too high. Okay, this point, somewhere around the 17th, 18th, this is the decision point, whether Bitcoin is going to break outside of this downtrend. Okay? That's what the daily chart is telling us. This uptrend within the bigger downtrend that started in October, we're getting very close to a decision point. So this triangle points to December 15, just 3 days from now. So the price can still squeeze into this triangle and break out by Monday. However, if it doesn't, like if it closes below the 91K key level, and just to stay above this blue dash trend line, then we'll need to wait for Wednesday, wait till Wednesday, Thursday, to see the confirmation of the trend change, or is it still going to come back to test this yellow dash line at around 82K. Alright, so that's the picture for Bitcoin right now. While it's going through seemingly a boring period, there's still a bit of movement, just that it's closing at a very narrow gap for 2 weeks already. Now we move on to Chiles. Chiles, I haven't covered it before, so it's still going through the paper hands, diamond hands testing period. It's somewhere in the middle part of the accumulation cycle. Okay, it entered the selling climax back in April, the second test mid-June, and now it's recovering from a test. Okay, this long white bar over here, that's a very big sign, let's put it this way. And then subsequently 2 weeks of very low red candlesticks. Now that is still trying to climb back to above the red key level of 0.036. So what we are hoping to see is a sign of strength to appear. So to challenge the orange key level of 0.054 with a long volume bar. Best to have something like what we see in the week of November 3rd. Alright, then that's the very first step towards the next distribution. It had a very quick one back in December last year and then quickly returned to accumulation. So sometimes a cycle can end very quickly, depending on where the capital is going to drive things. Alright, and the good thing for Chiles was that back in 2002-2003, it didn't suffer a very long accumulation cycle. It stayed pretty high up before dropping to the selling climax. Compared to some others, it was staying low for a very long period of time, almost 1.5 years. So this picture we're seeing, let's assume more tests to continue. Supposedly mostly between the red key level and the orange key level of 0.036 and 0.054. For daily chart, again, this time is not a downtrend. It's basically a sideways trend that's been around for quite a while, since the October 10th. So if we look at the volume, that's important, because what we see over here, those buying volume that pushes the price to the ceiling of the channel, or the red key level 0.036, subsequently the selling wasn't really that big of an issue in terms of volume. So I consider that quite a positive sign. It's just minor movements along this downtrend. So eventually, when this is over, if we look at this uptrend, there's still a bit of time. Extend this all the way to the red line. It's pointing to near the end of January. Okay, that's assuming the price is still going to be suppressed by the red key level. It can definitely break out faster because I'm drawing a longer trend line that started back in late November. However, what happened over here at the beginning of December, just last week on the 6th, indicated that the trend might have changed. Okay? This new line over here, this is a shorter term trend. So depending on which one it's going to follow. So the next few days would be key. If it breaks below this shorter trend line, then that means it's going to go back to challenge this longer term. And by that, it probably means we have to wait till near the end of January to see it finally break outside of this sideways trend and also break above the red key level. However, if the next few days confirms that this is the case, which the confirmation will come very quickly by Thursday, December 18th, sometime between now and then, the first opportunity will come. And if that confirms, not the case, it is like once again rejected. So if you're new to this air hockey table concept, basically the price actions are the tracks of the puck. The puck bounces between the ceiling, the center line, and the bottom. Okay, you see it do these moves all the time. So that's why I said the confirmation would come. If it's going to break outside, the coming midweek would be the timing. If this time is not the case, it's going to get some rejection and maybe bounce back to the center line, because if we look at these lines over here that I've drawn, the center line is exactly where it crosses the longer uptrend. So it may go like this and then get a rejection, trade for a couple of more days, and then come back here to the dual support and then continue to go this way until near the end of January, where we get to see a second chance of breakout. So let me extend this box further. Alright, so that's Chiles. Let's get to Chronos now. Chronos. Currently, it's still somewhere at the early stage of the accumulation cycle. We may be seeing the selling climax right now. Just that there's still quite a bit of selling looking at the long wicks from the yellow key level of 11 cents. However, I also share this green trend line. That's the ascending or higher lows trend line. So if you include the wicks, it's going to get a little bit less steep. Okay. So if it really comes down, for the selling climax to settle, may it be around this white dash line of around 9 cents. That's where October 10th and mid-November tested. It got very close to that level. Let's see whether the selling climax will land over there and eventually show us the automatic rally. Alright, may it be around the yellow key level or one lower, at around 10 cents. Subsequently, there will be more tests. Okay, so that's the big picture for Chronos, early accumulation from this pretty quick distribution. The positive thing that we can see from this big picture is that Chronos has a ascending peak condition. So let's hope that then when the next distribution comes, it challenges at least the 37 or 38 cents level. That's this time the peak has challenged. When we get to the daily chart, again, Chronos has exited the downtrend. So here on November 24th, around that day, the downtrend is confirmed over. So what we are seeing now is basically trading sideways at a very narrow range between this 10-cent line and this 11-cent key level. The volume themselves remains more or less the same, just that, like I said in the very beginning, the rejection from the yellow key level, is still the thing that's basically shadowing or suppressing the price of Chronos, and it may stay there for quite a while. You see these wicks from the bottom when it gets close to the 10-cent line, because there was quite a bit of buying during the selling climax. You see this long wick from the second white dash line at around 9 cents. So that's why it's trading at this narrow range right now. And it may continue the same for the next week. So I'm just trying to see if there's any particular trend which, if we just look at the past 4 days, obviously tomorrow is going to confirm whether it's going to break below this white dash line. However, if we look at a longer trend, okay, it's pointing towards near the end of this month, right? Assuming it's not going to go down, because you're seeing all these wicks pushing it the close to around this white dash line. If it continues to trade sideways but suppress under this trend line, eventually by the end of the year, again, a confirmation will come. All right, either it goes back to a downtrend, or it continues this way, meaning the downtrend it's pretty much across the board. All the charts, or most of the charts, are showing, at least for those in accumulation already, that they are waiting for some sort of breakout around the year end or the beginning of next year. So next is DCR. For Decreed, it's somewhere at the mid-late stage of a distribution. So it's got a buying climax back in the week of November 3rd, and quickly got quite significant selling, and subsequently it's coming down. We can consider this an automatic reaction. We can put it over here, but having these kind of quick distribution is always tricky, because it may never have last point of supply, so meaning it's not going to rebound. Sometimes it's just dies down straight into accumulation. So while I'm putting this automatic reaction over here, in the next few weeks, this I may have to delete it because it's just non-existent. Okay, so there's such a possibility. Let's assume that it is an automatic reaction, and that an LPSY would appear, and eventually it comes back to accumulation. So that's the assumption for now, because when I look at this selling from above the purple key level of around $21.82 is still pretty strong, while when it tries to go deeper to the $17.84, it's got quite a bit of support. But that seemed to be over for now. At least this week demonstrated that the downside pressure is stronger. It's currently below the blue key level of $20.47. So we're looking at the daily chart. I would say this may be the trend that's been going on since late November. Okay, the volume themselves are pretty low, so these red candles, the past 3 days, getting lower and lower, which may be a good sign, right? At least for this moment, staying above the blue key level of $20.47. So if this downtrend is to be over, the likelihood of the breakout happening is around, again, somewhere around silent night, the next opportunity right after Boxing Day, or if we look at what happened over here, coming close to the green key level, if it once again comes to this level, then it's pointing towards the beginning of 2026, where the third chance of breaking outside of this downtrend will show up. Alright, so that's for the greed. And let's draw the center line while we are here. So the good thing is it's still trading at the stronger half of the downtrend. Polkadot. So Polkadot over here, still having pressure from this 2.28 level. Remember, these levels are taken from both the week of October 6th and by referring to what happened back in 2020. Okay, the good thing, or the fortunate thing, is that for 2 consecutive weeks, it's been staying at around this level of $2. Some kind of psychological number that people like to buy or take profit around, the exact units, or like 50, or that kind of thing, so the big picture, the test is still continuing. The paper hands or diamond hand test is still going on, and what we're hoping to see is a challenge towards the 5.2 orange key level. That's where the sign of strength should hit or should go above with significant volume, like what we see in the very first week of November. Right? That's the big picture that may indicate a trend may be coming, and this may turn into a gem. Daily. Here, this downtrend seems to be over. Just quickly do a check. While it seems like it's trying to drop back, the bulls are fighting hard to keep it above the ceiling of the box. Yeah, just to make it tighter so we get a clearer picture of what actually is happening. So if we look at this, for the past, well, I won't say the Wednesday is testing this, but yesterday and today is definitely retesting this line, which turned from resistance to support now. So if these red volume continue to get lower and lower, and the price stays above this line, that's I would say at least neutral, if not positive. The reason I say why I say it's neutral is because of this rejection from above this 2.28 line for 2 days. That means it's not ready to go up yet. And even though it has exited the previous downtrend, it can still follow this support line and form a new downtrend. So that's the slightly pessimistic view when I am looking at these red candlesticks, and the volume is actually higher than the white ones. Alright? Assuming it's staying above this level where the previous test happened on December 1st was. Let's hope it finds support at this level. If we look to the left, there's not much reference over here. But at least this is a short-term level that we are seeing. There was pretty high volume at those days. This red volume over here includes the buying from that level. So it gives us a little bit reference value. So if the price continues to bounce between the 1.96 level and the 2.28 level for the next few days, that shouldn't be something that surprises you, okay? What we hope to see, like I said in the beginning, while the test continues, is for the price to come back above all these white dashed lines. Back to above this white solid line, that means $3.40, because that's where the selling climax was back in April. Even if it only managed to stay above the $3 level, that's still fine. That's where the secondary test and the previous testing period after October 10th was. So that's a positive when it climbs back to above $3. And we hope to see it challenge the 5.2. Alright, that's Polkadot. And then we have EGLD. Here, it's in the early stage of accumulation. We are possibly seeing the selling climax. If that's the case, then next, is the automatic rally to come. So don't be surprised after the bounce that it's going to come down again. But this is the weekly view, so it's not going to all happen in a week, okay? It may be. If that's the case, there's only one candlestick that showed up and then having a long wick pushing the price back down. We don't hope to see that, okay? There's still downside risk. However, if it's really showing the selling climax already, the paper hands, diamond hands test going to check out the last few paper hands, and then the bottom will appear. So looking at this long-term playground zone that tracks back to 2020, that's where the kind of the lowest level was. It's pointing to $1.06 roughly. We don't want to see it to go that deep. There's still one support level at around $2.8 before that. That's where the October 10th tested, as well as that's the peak of that. You can treat that as the top of the accumulation back then in 2020. For daily chart, again, it's a horizontal trend. It looks like it's a downtrend, but if it is, it's very gradual, not almost like a horizontal trend. Let's assume a more pessimistic scenario that it is a downtrend. Okay, then check the volume. That was a very good buying day, and then subsequently the volume declined. That's something good to see, especially we have red candles. So hoping it to stay above the orange key level at around $6.44. And let's draw this center line as well. Currently it's battling around this, so trying to stay above the stay at the stronger side of the channel or the air hockey table. So it points to here sometime in mid-February for a breakout potential. Yeah, it's pretty far down the line, so I'm just checking. Let's borrow this period, okay? Because this may provide an indication if the price manages to bounce up in the next few days. Over here, this triangle. This is pointing to near the end of the year again, okay? Not surprising. I already mentioned a couple of times that many altcoins are exhibiting this kind of behavior. So would there be another reference line in addition to this one? Certainly, if we look at this very busy trading period, this definitely is one level, but here, around here, we have another level. Okay, before the orange. there are multiple intermediate levels. Let's take reference of all of them. Okay, we've got 3 references that we have already touched on. The first one, pointing towards the end of the year, and then coming mid-Jan, and eventually around 23rd January. Okay, these 3 lines, depending on where the price actions move towards. Okay, if it's the orange key level that it finds support and continue to be suppressed by this 3rd line at around $7.30, then eventually we have to wait till December, mid-December, for the breakout to happen, to confirm that this downtrend is over. However, if it stays above the current line, the current support line, then it will move forward by almost a month. That points to January to the 23rd. Okay, by next time when we come back, there's still time for us to look at this. And now let's move on to Ethereum. ETH, quickly, again, we discussed that this may be a sign of weakness that's at a similar level as what we had back in February, so quite a while ago. That was the last cycle I consider, okay, because there was a quick accumulation quickly into this new distribution. And this very strong or very long wick from the blue key level of 3,540, pushing it all the way to below the light blue key level as well, the 3,200, all the way to 3,070, may well be signaling that this really is the last point of supply. Next week, we will be able to see whether it's going to come back down to challenge the 2,800 level. Okay, much like what happened last week. So this view remains that Ethereum may come back to accumulation. How far it's going to dip to? Last time the selling climax was at around 1,500. If it stays along the center line of the long-term playground zone, this time it may be somewhere in the 1,600, mid-1,600 roughly. Okay. However, the test did go deeper. Last selling climax, the lowest point was around mid-1,300. So while I say it may end around mid-1,600, it doesn't mean the lowest point will be there. It can be lower. So if this is not the pessimistic scenario, the 20%, Ethereum hasn't really gone to an upthrust. If this is just a reaccumulation going back to this level, obviously there should be a couple of weeks of sideways trading. So we're still early if that really is going to happen. By then we'll see some sort of pattern. Alright, so both negative and positive scenario covered. Let's move to the daily. Yesterday and today, well, actually the day before as well, kind of confirmed that the price is still staying within this downtrend. Let me adjust this a little because the bottom here isn't really tight. So we've got this dip, dip, dip. Okay, so the bounces from the ceiling happened just 2 days back, and currently is testing the 3,070 level. This is a level both for the last or one of these dip over here, as well as this particular period back in late 2024, January 2025. So not too far back. Looking at the volume themselves, it's actually quite a bit of selling. Even this day was white. This inverted cross over here. So we, would be expecting it's going to come down from the 3,070 back to test the 2,800 level. Again, like I shared before, this 2,800 level is a dual support. Both the key level itself and the ceiling of the long-term playground zone. So previously I did mention that let's expect a couple of bounces along this dual support over here. It should, like what it did over here, the dual resistance, it bounced like 4 to 5 times before it finally broke out. Many occasions we see. So it's not surprising that it continues to bounce all the way till January 10th. Okay, that's pointing towards that. If it stays above the 3070, the breakout confirmation may come right at around the year end. So that's the 2 time point being indicated. However, if in the big picture it really comes down to accumulation, I did say the mid 1000, right? So if this downtrend continues, that's going to point to somewhere at the end of January or even further down the line before this downtrend is going to complete. One slight positive thing, you probably already noticed that the price is still trading at the stronger half of the channel. So let's remain positive that it can exit the downtrend near the year beginning of 2026. So Ethereum, that's it. Filecoin. Filecoin here at a mid-late stage of accumulation, continuing with the paper hands or diamond hands test. Over here is seeking a lower level that if we look to the left, there's no reference. As early as 2018, even the chart went that far, is exhibiting a behavior similar to a couple of other altcoin projects that is setting an all-time low. As of this moment, it's still higher than what happened back in the first week of November, or the second week actually. November 3rd is the beginning of the second week of November. So here, let's assume it's going to stay above this line that was set by that first week, where it found significant support. The price got pushed back up with high volume. All right. Let's hope this is the final shakeout, even though there's quite a bit of selling looking at this long wick from there. But the volume has been consistently lower and lower for the 3 weeks that we are seeing here. So to me, it's a good sign. Okay, red candles, lowering volume. That means it may be over. Okay, so let's hope this is the final test. Then it's going to climb back to the white, above the white solid line. That's the hope, at around $2.28. Best to come challenge above the 3.15 orange key level. That's where the automatic rally was. Okay, and somewhere between the 3.15 and the yellow 3.60 level, that's where we hope to see a sign of strength with volume, much like what happened over here. Just stay above, don't become awake. Okay, close above the 3.15. That's what we hope to see. Daily horizontal trend continues. It's definitely coming to test the bottom, but these air hockey tables, eventually if it's really getting over, it's going to bounce back up. It may continue testing for a period till the year end, bouncing between the 1.2 to 1.7. However, as long as it doesn't break below this bottom of the channel box or the air hockey table, that's fine. Let it trade sideways. Looking at the volume, yeah, a bit worrying because it's higher than December 10th. But then today it has came down from yesterday, which is a slightly positive sign. So tomorrow, even if it ends up as a red, let's hope it doesn't have a high volume. So something like this over here, a small body candle, red candle with low volume, that's still acceptable. Okay. So after Filecoin, we have flow over here. Let me take a sip of water. It's been an hour. So I'll go speed up because this should be a speed run. I've been talking way too much. Same thing. Testing period. Coming to a low. Testing the red key level of 0.188. So that's what October 10th set. And if we look to the left, there's nothing that has come that low. So for flow, I would still consider that not that young, but not a baby coin. It's been there for 3-4 years now, but still not as old as the other ones. So let's hope the lowest point it gets to is where the October 10th set, and what's expected is that the test will continue and challenging the blue key level of 0.467 with volume is what we hope to see before flow gets back to a new distribution. The thing that worries me over here is that even though it may come back to challenge the 1.2, somewhere around that level, $1.20, is also exhibiting a declining peak scenario. That's something I shared in multiple occasions. That's not a good sign for your long-term investment if you are deciding to be a diamond hand, okay? Because peak after peak is going to decline. That means your return on investment is going to be lower, right? Just that because it is setting a lower low, that may lower the effect a little, but it still has its effect. Because when your base is lower, if it climbs to a relatively less high level, you may still get a pretty good, 5x, 6x kind of gain. But best if we can see the next buying climax to come at least back to the similar level of $1.2, $1.3. Okay, that's I think the entire crypto industry is going through a period which the better projects are going to stay, and the ones that are weak are probably going to be eliminated over the course of the next few years. So that's the part that we have to be aware of, right? For the daily chart, definitely when we look at this long red volume bar that pushes the price down back to around the orange key level of 25 cents, that's the most worrying day in November on the 20th. And eventually it struggled a bit around the same level at the beginning of November, and where we are now, combining with slightly higher volume than that period that was stabilizing, I hope to see the volume continues to come down, because otherwise it looks like that this, assuming after October 10th, this is the downtrend we're going through, it looks like there's no end to it, right? The volume just started to climb again over the past 5-6 days, and this is definitely not healthy for flow. After a period of seemingly stabilizing, the bulls and bears trying to agree that the 23 cents was supposed to be the level up till the 29th of November. Somebody start pushing the price down at a low volume, and then it climbed back because people would think, oh, low volume coming down, let's not take it too seriously, and then they started buying. But then there comes the higher red volumes, including today and yesterday. So let's hope to see lower volumes when it gets closer to this 18-cent line that was set by October 10th. And hopefully by then, the drop will be over and it starts trading sideways. Even though it's going to be suppressed by this channel ceiling, it's pointing towards early mid-February that a breakout or trend change confirmation is going to come. All right, that's kind of a neutral, slightly positive view, because the very pessimistic view is that it continues with this downtrend and seek an all-time low. And currently, if I draw a line, a center line for this box, it's trading at the weaker side of it. So that's why I said when it reaches or get close to this red line, it's going to find support and comes back to the stronger side and gets its breakout opportunity. Otherwise, we have to wait until the price actions set a horizontal trading zone. Then that may be the actual bottom. Okay? So that's the pessimistic view. Now we get to FRR. Again, very first time I cover FRR, flare. We are seemingly going through the selling climax period. You see the volume obviously came down from the earlier period of quite a bit of selling and bigger price spread. This week's price spread is significantly lower, so that's why I said it's probably at the selling climax. However, the second test and the subsequent test may still be lower. Look at what happened over here. Just in April, it came to test the bottom of the long-term playground zone. If we look to the left, 2023 definitely has gone even lower, but that's not what we hope to see. Unless the economy crashes, then those levels all the way to 0.007 may be possible. Okay, so let's hope it's going to stabilize around the red key level of 0.012 and not getting lower than the 1 cent level. That's what we hope for, because that's where the April low came in. Okay, it was a pretty quick accumulation back then. Similarly, flare has this declining trend line, so let's hope by the next buying climax comes, it doesn't end below this red dash line, because that's going to be pretty disappointing and is not a project I would choose if that happens. No, not that I'm choosing flare anyway now. Lines, I'm going to stay away from them for a while. Okay, for daily, this downtrend is seemingly smoothing out. So you see, not this steep line, but over here, now that it seems like it's slightly trending towards a less steep decline. If I draw a box over here, so let's say if this was the previous trend, currently is trying to find support from the previous trend ceiling. All right, it had moved outside of the trend on the 27th of November, just to drop back after 4 days, and then now it's trying to use this ceiling as a support. Okay, that's what it is showing right now. If you ask, can we do it this way instead? Meaning that peak over here in or November 10th isn't really challenging the ceiling. Now that can be the case. If that really is the case, okay, let's draw a center line as well. Let's put it over here. It's still at the stronger side of the channel. So if it continues to bounce within this air hockey table or channel, I want to extend this all the way to the very bottom, so it crosses the white line. So the breakout dates that is pointing to, this is again right before Christmas, next one New Year, the third one January 12th. So these three key levels, one at around 1 cent 30, the other 1 cent 20, and this one 1 cent 08. Those three points to different time of a trend change confirmation, assuming that's the case. Okay, if we find support on this above this red key level of 1 cent 20 and continues to trade sideways, the likelihood of breaking outside of this downtrend is by some good news come for flare by then. And the volume themselves, yesterday was red, but there was some buying from the bottom, so it's a good sign. Today, people sell, but at a low volume. So, hope that it is the case that this red line really is the bottom. At the day of November 21st, when it challenged this level. If we look to the left, April did go below. Let's hope it doesn't repeat. November 24, 2024, found support at this level. So let's hope that's the case, okay? Not this case, but just to let you know, this is possible. Not that it seems likely by looking at the candlesticks at the moment. All right. Next, Hedera. Hedera going through a mid-late stage of distribution. So after the buying climax and second test back in late last year, earlier this year, it has gone through another round of tests in summer just to come back down. Currently, setting another sign of weakness and potentially re-entering a new accumulation. So it definitely has re-entered the long-term playground zone, the white box. Okay, I may have to adjust this box as well later on, because seemingly Hedera is going through a more volatile period in terms of a long trend, from a long-term perspective. So I have to adjust this box. Anyway, the thing I'm trying to point to is that the ceiling currently, that was the support of the previous two signs of weaknesses back in April and June. Over here, April and June. Now, it's not providing support anymore. You see this week, the long wave from the top pushing the price back to below this line indicated that this downtrend, even though with low volume, it's not over. Okay, it pushing the price, staying underneath this center line of the downtrend. So this view remains same. It's probably going to get into the preliminary support stage of the accumulation, where further selling may happen while the whales get in, and eventually we will see the selling climax. Not saying it's going to go as deep as the bottom of the white box. That was where it landed October 2024 as well as January 2023. So when we get to the daily chart, we're seeing this. Okay, I probably has shared that this by December 17th, it's going to be a chance to confirm whether it's going to trade towards the stronger side of the channel. But today's volume, has risen combined with this price drop. It seems to confirm that the downtrend is going to continue to test all the way to the purple key level of about 11 cents. All right, unless the volume quickly comes down and stabilizes, pushes the price back to the white line, like what it did over here during November 21st, 22nd. Otherwise, like I said, it's likely going to test the purple. If that's the case, let's see what the purple line is. It's actually the support around this peak levels of March, May 2024. So if it really comes to that point, hopefully it stays strong over there while the test continues. This is pointing towards March next year. I'm trying to see whether there's an intermediate level. Yeah, there should be at least one, if not two. So let's borrow one of these lines, put it over here. You see where these spikes were, right? So assuming this intermediate level exists, at around 12 cents, this points to still early March, so much later than the other altcoins in order to break out the downtrend. However, like I said, if this is just like a very short test, okay, that was it. If this is really a short test and quickly reclimb back to above the white line, then this points to mid-February, so about a month earlier than the ones around the purple key level. So it's very key what happens for the coming days. If this daily Wyckoff trend does exist, if it comes to challenge the white dash line, which that's likely is a sign of strength, and if it does it quick enough, it's pointing towards Jan 9th or 10th for this, where the line crosses the ceiling. So that's the best case scenario. Okay, of course, you say if there is a crazy good news that it shoots above the red line immediately, even before Christmas, of course that still a chance that it happens, but the price itself, at least for today, is not saying that's the likely case, unless I don't know, the Europe or the US and China, they all come to agree on something around the tariffs, the wars, and the world becomes happily ever after. Then if they give everybody this Christmas present, obviously passing the red line or even the orange line before Christmas is possible, if that happens. Weekly for Casper. Again, water time. Here, I said previously, it's probably a preliminary support period that during October. And here, just in mid-November, the selling climax and then automatic rally immediately follows. The past 2 weeks, including this week, is coming down for a second test, which I'm keeping a question mark because the volume has declined, so it may not come back to as low as the yellow dash line at around 3 cents 80 or 90. While the test is still definitely going to continue, currently it seems to be finding a little bit of support as of this moment. Yeah, there's definitely some references, including this wick as well. Not that it's a strong support over here. There's still 2 days and 4 hours left for this week's candle, so it can definitely come test lower. When we get to the daily chart, we'll be able to see more. Again, this is the round of paper hands and diamond hands tests. If the sign of strength do come, it best challenge the red key level of 6 cents 50 with a volume best higher than what we had during the automatic rally during the week of November 24th. And to the daily chart, here, it's absolutely declining with declining volume, which is a good sign. Yesterday there was quite a bit of buying. That volume combines both selling and buying, and today is more of buying, but it's stabilizing, trying to stabilize around this level. So if I draw this line over here, alright, let's unlock this. This is the line I'm talking about. So why here? It's because of these candlesticks and these candlesticks. And that's why currently it's bouncing from this level. But like I said, it's not a strong support level. There were some references over here as well. So let's say it may stay there for a couple of days, but coming down to the yellow line to test it once more is still kind of possible as of this stage, looking at these volumes right now. Alright, the trend obviously is a sideways trend, the bigger trend. Alright, although smaller downtrend is going on. I am referring to this one over here. Okay, this is trading at the weaker half of the box, definitely. If we draw a center line across the most frequent candlesticks within the sideways channel, it's trading at the lower or weaker side, so we hope it to come back to the upper half. Alright, not that it's that likely for the time being. It may have to travel all the way to near the bottom of the channel before it bounces. So I hope it start to bounce around Christmas. Alright, looking at this current trend, there's 1, 2 potential breakouts out of this short-term downtrend within this larger sideways trend, pointing towards somewhere near December 21st and then eventually near the end of the year, if it is the bottom of the box. Okay, the yellow dashed line is a bit earlier, just up by 2 to 3 days. But looking at what happened, just around 21st to 23rd of November, it definitely can test the bottom of the channel box. Here, beginning of November, better, somewhere closer to the yellow dash line. So let's see how far this downtrend would go for Casper. Next is Litecoin. Litecoin stabilizing above the $79 orange key level. It may be somewhere around the preliminary support, yet to show the selling climax. So last time the selling climax ended somewhere between the red key level of 62, so higher than that at around $70. That's also somewhere around the center line of the previous accumulation cycle back in summer to autumn of 2024. So if we go to the daily, while we're still waiting the selling climax to reveal itself and then comes with an automatic rally, the daily is showing us that the trading is still at the weaker half of the downward channel box. The volume kind of stable, about average. The prices are finding support above this orange key level of around $79 for except the day of December 1st. So since November 22nd till today, for 20 days, only one day dropped slightly below. Let's hope this continue to stay above this orange line. Alright, that's quite a bit of buying. You see these wicks from the lower half or the tail of the candles. So let's hope that means there's sufficient support from that level. Although resistance from below the center line is also there. So it's the bulls and the bears are equally or equal strength at the moment around this level. It's a narrow range between 79 to 88, roughly $9 level. Not too bad if you have been trading within this sideways trend, because that's probably around or over 10%, just over 10%, yeah. So every bounce, 10% is not too bad of a profit. All right, so expect sideways to continue for Litecoin for maybe the next couple of days, but from a big picture point of view, that have I jumped to the wrong part? Let me check. Yeah, from this big picture point of view, it may not be over yet. Okay, while it's finding early support from the $79 level, it may still come down to test the bottom of this channel box as well as the red key level of $62. Alright, by then the selling climax would come. So one scenario would be that it come down a little, ending somewhere similar to what happened back in March. But then it may still dig deeper for subsequent tests after the automatic rally. Okay, that may be the case. It may not happen exactly like what it did last time. Okay, very quick and high automatic rally, a quick dip to just above the closing above the 79 orange key level, and then quickly get into a new distribution. That's, I would say, a rather positive scenario if it really copies what it did over here. But it doesn't look like that at the moment. Okay, Polygon, big picture, we can actually paper hands, diamond hands test continues. Update. There are a lot of these tech to update, and I just missed some of these, but never mind. So what's going on over here is that this week, while there has been some selling from above, is also kind of find support at this 11 cents 90 level. Remember these lines, these levels, 0.095 and 11 cents 90, is borrowed from the Matic chart because Polygon has changed its call sign. So I said before, this is the support level that we hope to see Polygon staying above. Worst case scenario, this yellow dash line, 0.095, don't go any further down, because that means in the history of Polygon, we can't really find a solid enough reference to support where it's going to go next towards the south side. And again, positive side, or positive hope, is that it comes back to challenge the yellow key level of 28 cents. So that's what it did during end of August. Okay, failed to challenge higher afterwards, and now getting to this point. If this is a spring, which means after the sign of strength, the price comes back down to do its last shakeout before Polygon gets back to, probably not even the sign of strength, but straight into distribution sometimes. That's a very good scenario, because it means it's getting near to the end. And this week's volume declining is also another good sign that support is not going further down. That's the hope, okay? If something crazily negative comes out, in terms of news, then this is not going to get over that quickly. So last time we talked about this, we just touched on this line as well. Previously, all days closes above this line. Today is a bit risky. There's still 3 hours left for the bulls to push it back to this 119.119 support line. Last week, I think, or last session, I believe I have shared that December 15th, 16th is the day that this trend is going to be confirmed. definitely it can confirm earlier. So if it's really confirming that it's going to continue with the downtrend, we can only accept it. But there are still 2 to 3 days to go before this very tip of the triangle. The best hope is for this price to close above this 1.119 line today, and then for the next few days continue to trade above this line, and eventually goes sideways to continue forming a new sideways trend. So that means trading between the 1.119 to 0.15. Alright, it's not it really depends on how it ends today and tomorrow. It's not over yet. Looking at the volume, it's not particularly low. So yeah, the chance of coming down to the yellow dash line is definitely there. So Solana, similar, very similar. Okay, look at Polygon, not Polygon, sorry. That should be LTC. Yeah, this three pin and crosses and Solana looks very similar, right? It seems to be stabilizing at this stage. These two are just assumptions that there may be a lower level of sign of weakness around the 100 orange key level. That's where March landed at. There's also another scenario where this doesn't happen and the price comes straight down into accumulation, meaning the preliminary support stage. Okay, that's what it is over there during April 2022. And of course, eventually it will go to the selling climax if that's the case. However, looking at the distribution cycle itself, it has gone through the buying climax, the upthrust, another test after that. Not that it has gone through an upthrust of the distribution, so there's still a chance, if you are extremely positive, that it may come back up to challenge the purple key level of 260, assuming it is reaccumulating over here. Not that it shows it is now, but it can develop into that sense. So that's the slightly positive scenario with a lower chance to happen. And in terms of daily, okay, finding support above the 125 yellow key level, quite a bit of buying from the low point just to get rejected from this from above this yellow dash line of 137. This week is particularly obvious compared to last week, where it did close above that yellow dash line. So this week is definitely weaker than last week. The volume themselves, yeah, the only positive thing that still remains is that this buying from 125 were pretty strong yesterday and on the day of December 7th. However, if it's continued to be suppressed by this yellow dash line, it will eventually trade towards this triangle. Okay, that's pointing to somewhere around January 8th. That's when there is an opportunity to break out. Alright, however, if it's slightly more positive and comes above this yellow dash line, then it's pointing towards near the end of the year, around 29th or 30th of this month, that it may break out. So there are two chances, one near the end of the year, the other end of first week of Jan, around the 7th or 8th. Definitely can break out sooner than those days, but those are the indications trend lines and the price actions are telling us. Extend this long-term playground soon for now. Alright, quite a bit of sideways trading for a lot of coins. Now, SWI. Here, we've got early accumulation cycle. somewhere around preliminary support stage. Again, quite well, not some pins and crosses, but still narrow price spreads, similar to Solana and Litecoin. So from a big picture point of view, it will eventually show the selling climax. Hopefully not too low than the $1 red key level. Okay, last time it was around 57-58 cents in June 2024. Upside, obviously well, unless this is a low level distribution or like higher level accumulation. Let's say if this is the selling climax right over here, assuming it is, not that I see that is, I still see it as preliminary support. Assuming that it is, there would still be a bit of sideways trading around 150 before the actual climb, until we see that pattern. Daily, it definitely has indicated kind of, well, even if we adjusted this, that's going to be tricky. Yeah, I'm just aligning the bottom of those dips. It's definitely trading sideways for over 2 weeks now, staying below this blue dash line of $1.71. Trying to stay above this $1.50 orange trend. That key level is providing support for the last 10 days. So in terms of downtrend, after we adjusted the air hockey table, this is trading definitely towards this cross. That's pointing towards 21st of December. Assuming it's still going to bounce between this dash line and the orange line, it's going to hit the ceiling in the next 2 days. Let's see whether it's going to really trade that narrow going forward and then eventually break outside of this downtrend. By that point, there's no further adjustment that can be made because we have all these actually 4 dips as the references. 1, 2, 3, 4. All right. So previously I was leaning towards the positive side to the peaks to adjust the air hockey table. Now that we adjusted towards the valleys, it's showing us that in about a week and a half, that's a trend confirmation opportunity. If it doesn't happen, if it gets rejected from the ceiling of the channel, then the next one would come around the 9th of January. Alright, let's delete these. Next is Celestia, TIA. Big picture perspective, again, seeking a very low point. Haven't yet seen the selling climax. The low set by October 10th is at around 31-32 cents. Not that we have anything similar, since Celestia is still pretty young, at least from this chart point of view. So I'll further adjust this box later because I only have time to put in the tags and the key levels. So if it does come down to test the October 10th level at around 31 cents, then let's hope that that's the bottom of the accumulation cycle. Best is if it really is getting into selling climax. But given the selling we see from this level, this may not be over yet. After the selling climax, is the automatic rally. Then we come back to challenge the red key level of 95 cents or even $1.30. That depends on how the composite man wants to play the game. this last checkout may or may not happen, but definitely the paper hands time and hands test is going to continue. Daily chart. Slightly downwards trend, not as horizontal as the other altcoins, not as flat as the other altcoins. So again, keep drawing the box until it hits the line, assuming that's the trend that has formed. It's trading at the weaker side of the channel, definitely. Weaker half of the channel. Nevertheless, let's hope it will eventually trade sideways when it reaches the low point defined by October 10th. Okay, that's somewhere around 28 cents. Let's go through the pessimistic scenario. Okay, and eventually edges outside the box. That's leading to mid-March. If we want it to trade sideways, let's assume the current price actions over the past 8 to 10 days, assuming this is a support. All right, look at all these volume just to check. Not too bad. This isn't high enough, but let's say if this is really the support line that will hold till early February. Okay, that's when an earlier confirmation of trend change would come. No more to the downside. Okay, just that we have to wait for another 1 month and a half at least, all the way to 3 months. All right, that's Celestia. Tron, TRX. Very strong cycle this time. It's still at a very high point after the upthrust, potentially showing us a last point of supply before it comes down for a sign of weakness. That level would be around these orange key level of 20 cents 90. Okay, that's where it came down for during March. We're still a bit far from that, so there are quite a number of support levels between the 209 to the one we are seeing now at around 273. We're still above, or Tron is still above that support level. Definitely it can come up for a second test. That's the big picture. Slight chance for the upside, more or higher chance towards the sign of weakness. In terms of daily, it's going through, of course, a downtrend. So that's somewhere in September. This one isn't even October 10th. Okay, that was September, early September. This was October 10th. Ended even higher than early September. So there were early signs for Tron that it's going to come down, at least for a while, if not for a long period. As of this moment, the price is still trading on the weaker half of the channel. Looking at these frequent key levels, there are definitely many opportunities for Tron to break out. Just that the messages is a bit mixed. So we've got quite a bit of buying from the point where it challenges the red key level of 27 cents 30, but then today's buying is still around half of the volume of yesterday, so it's a bit mixed. So the bulls and the bears are definitely going to fight around this red key level. If that's the case, if it continues to stay above the red key level, then by the time we get to near Christmas, that's one confirmation opportunity. The next, for the pessimistic scenario that it comes down to challenge the purple key level of around 26 cents, is pointing towards the beginning of Jan, the first few days of Jan, another opportunity will come. one further down would be around 10th of January. So 3 dates, December 23rd, Jan 3rd, and Jan 10th. Those dates are the days with a potential breakout opportunity for Tron. Quickly into VeChain. Here, we have this potentially a spring. It's a deeper test. Again, same thing. Paper hands, diamond hands. Looking to see a sign of strength. Best to challenge the 0.035 yellow key level. Alright? And daily chart. This downtrend is still continuing. It's trading also on the weaker half of the box. So that hasn't changed since we have drawn this box. Just that the volume has come down a little, stabling around 0.012. But that isn't over yet. Okay, this test will continue. If it continues to be suppressed by the center line, it's pointing to somewhere near the end of Jan, before it even moves to the stronger side. So January 25th, that's where the center line points to this yellow dash support line at around 0.0096. If, however, positivity comes in and it climbs above this yellow dash line of 0.0129, then it's pointing towards 21st of January that it will break outside of this downtrend. So if it climbs above, gets suppressed by the red line, right key level 0.015, and trade along this triangle, it may confirm to break out at an earlier date than continue trading at the lower half of the channel. That's VeChain. And XCN. So Onyx coin potentially is showing a sign, the selling climax. The price spread is getting really low. The volume not especially low, but still good enough. Okay, there's still quite significant selling pressure when the price tries to get above the 0.006 level. If this is the case, you know what's next. The likelihood of an automatic rally that sets the top of the trading range, and then it may come back down for further paper hands and diamond hands tests. Alright, let's get to the daily to check the trend, whether it has changed. So definitely it has challenged this yellow dash line that's set by this previous rally on 22nd of November at 0.0063 roughly. If it continues this sideways trading that started November 14th, then eventually the breakout timing is pointing towards mid-Jan, Jan 13. This triangle over here. Alright, it may break out sooner, but as I said, in a lot of altcoins that we cover altcoin or Bitcoin that we covered just now, many of them are pointing towards these days, mid-Jan, the third week of Jan, and eventually late Jan. From Christmas till those days, there are multiple chances that these breakouts will happen. It's interesting how these seems to be synchronized, even though they are all different projects. Alright, expect more tests to come, or sideways trading between these two levels, 0.0063 and 0.0047 roughly, up till the point of mid-Jan. Of course, positivity comes in quickly because yesterday's volume was pretty high, just that half of it was selling, okay, this week. Otherwise, it would be quite positive for this, if this is like a sign of strength. And today's retracement, even though the price spread is high, the volume is significantly lower. So if this is really trending this way, it doesn't have to wait till mid-Jan, right? It can come closer to near the end of December if it continues to trade along this line and breaks us eventually. Okay, a little bit more positive scenario than the other one. Now we get to Monero XMR. Here, it's going through a late distribution or mid-late distribution period, depending on whether there will be an upthrust after distribution. It's not a must. Currently, it may be a second test after the upthrust, or just an LPSY, for that to eventually come down to show a sign of weakness. The last one was around August, September time. This may be the next move. After a couple of weeks, we may end up seeing Monero at around this level of $260. Currently, I've drawn roughly these couple of key levels because when the price really comes down, it may find support at these levels. The light blue 357, green 337, yellow 326, so far and so forth. And upside, definitely, I did mention we haven't seen a possible, but not a must, scenario of upthrust after distribution. That can still happen. It depends on what kind of momentum is driving Monero. This uptrend hasn't finished yet, so that's why the chance of upthrust after distribution is still there. Alright, this is kind of like a tricky uptrend because the spike was pretty strong back in that particular day on November 9th. Alright, so if this uptrend is still going to continue, what would confirm the breaking of the uptrend? One date is January 18th. That's the cross between the purple key level of 417 and the bottom edge of this uptrend. That's Jan 18th. Why I say if? Because currently it's trading between the blue key level of 388 and the purple key level 417. However, it did test the lower light blue key level of around 358 just on the 8th, the 7th and 8th, just a few days back. If in the next few days it comes down to challenge the bottom of the uptrend and continues to be suppressed by the 388 blue key level, this day, right at New Year, will be the trend deciding point, not the January 19th. Okay, January 19th is rather neutral scenario that the price continues to trade sideways at the current level. But it can come down and challenge the uptrend support earlier, right? It's been staying flat since it challenged and failed on November 9th. So over a month now. Okay, if it really is dying down, looking at all these volume, okay, that suppression was huge. And current volume isn't really that high, so it's not supporting it to go up. So like I said, sideways, either the end of the year or January, mid-January, this uptrend confirmation will come, and this may signal a change in the direction for Monero. It's going through a period better than Zcash and a couple of other coins, but it may be running out of steam now. Let's delete this. For Tesos, XDC, it may be at a stage of selling climax. Again, lower price spread, lower volume, which means it has gone through the preliminary support period, and while we are still trying to confirm the automatic rally, this may not be the case. More may come for the next week or the week after. That may challenge the yellow key level of 0.00118, even though the price currently tries to close to the red key level of 0.0011. If we go to the daily chart, okay, it's trading horizontal definitely, finding support from this white dash line of around 0.457. This is right above the bottom edge of the long-term playground zone. If we zoom all the way to the left, you see what happened back in 2018 all the way to 2019. That was the low point of Tesla's. Okay, that's why all these dashed line over here. Currently is finding support at this white dash line, from that particular period, 2018-2019. It doesn't mean it can't come further down. The indication we got is October 10th, challenge this level. So let's hope that's a very solid support from this level that Tesla is getting. And it continues to trade at least sideways between the red key level and the orange key level. And eventually show us the automatic rally. Closes at a higher level. Somewhere around the orange key level. Okay, that's something we hope to see if the selling climax is really going to come down and, stops at around this white dash line. Best we can see automatic rally to come back to the orange key level. That's Tesla's. And finally, Zcash. Very crazy period, right? It seems like really automatic reaction is over, and that at least is an LPSY last point of supply, if not going back to a second test. Alright, we get to the daily chart, we'll see what the trend box looks like. I want to show you what happened during this crazy peak after the automatic reaction. That jump wasn't very high, so it came down to a similar level to the top or the ceiling of the long-term playground zone, around $330 for the automatic reaction. That LPSY ended at $450, so roughly $120 above the automatic reaction. This time around, $340, a little bit better than last time, but this bounce currently is at $450 roughly. Okay, very similar to that particular time back in 2017-2018. If it follows exactly the same, then it will eventually come down in the next few weeks. Because look at this white bar, the white volume bar. It's not really high. There's still 2 days left for this to climb further. But if it stays as low as it is now, the tendency of the price coming back down like what it did over here in 2018 is higher than it going up for a second test. Okay, so the chance of this is higher than this. Okay, this is keeping it here because there are always people asking me why I always just talk about the downside and no positive scenario. There is, just that the chance is not as high. That's why sometimes I don't verbally talk about it. At least I leave a tag over here so there is a chance. Okay, I always say either north or south. It's never a zero chance because we don't know what's going to happen next in the world. Trend can change over just one announcement if it's speculative. I shared before in the previous sessions that if Zcash is able to stay above this trend line, we adjusted this before. Remember, it was trending very steep upwards at about around 40-45 degrees. Now it's at around 30, but still it's going through an uptrend. So when it comes, if I draw a center line right now for this channel, for this air hockey table, That's where it is. Yeah, it's not 50% if you're new to this box. It's not always at the exact half of the box. It all depends on the candle price actions. So good thing is on December 8th, it passed this line, which was the resistance, formed by these two periods, and stayed above this bottom edge of the air hockey table. It bounces from the bottom, so the first test will be when it reaches, if it can, because the volume is getting lower, and we're getting to the weekend, so how it starts next week is going to be key. It can come back down to challenge the bottom edge. All right, so this is the first challenge, the center line. If it can go above, the second challenge is this yellow dash line at around 475, because that's where the previous highs were. November. Both time challenged this level, but both time failed. All right, so that's the second challenge. And eventually, this over here, where does this come from? 888,889. I believe that's where the previous high was. Yeah, somewhere around this level, back in 2018. All right, that's when we first talked about Zcash. We have drawn this level. All right, if it wants to reach that previous all-time high, there are at least 3 challenges for it to go through, or before reaching that, at least 2 over here. Okay, definitely it shouldn't come down to 4 outside of this bottom edge. Like I said, the volume is coming down. It seems like it's losing steam, and it happened also last time back in 2017-18 after the crazy climb, and after an LPSY, it eventually died down back into the long-term playground zone. Okay, and stayed there. It did have another distribution, but not as crazy as the one before. Okay, so that's Zcash, and that sums up this week's session. It's much longer than I expected, so I have to shorten what I talk about in the future speedrun sessions, so to cut it back down to around or less than an hour. That's the goal. So expect the pace will get faster. Thanks for joining me. See you in the next